As we return to regulation, I believe that one of the changes is the possibility that robo-taxis and other forms of autonomous mobility may be governed at the federal level rather than by 50 separate state regulators. Since autonomous cars would be traveling between states, federal legislation is actually necessary. It, in my opinion, will hasten the transition to autonomous taxi networks, and as a result, analysts and investors are beginning to predict how it will affect the Tesla business model. If we are correct, robo-taxis and autonomous taxi networks are a SaaS model, which will push their gross margins from the mid-teens they currently have to the 60s. Another thing that has probably happened is that, as the humanoid robot's hand dexterity improves, more and more people are watching footage of it performing various tasks that we didn't think were conceivable. I believe that whenever two businesses come together, it takes some time for the integration to happen. Therefore, we would assume that it will be delayed if there is a competitive dynamic between those two autonomous enterprises. China is definitely going to be a bigger competitor for EVs. Here in the United States, we already have very high tariffs in place to stop it, and we'll see what the government does. Elon Musk isn't concerned about competition, in my opinion. He is also not concerned about losing the EV tax credits because if we are talking about Tesla, he is significantly lowering the cost curves for his own business. They are not necessary. He will make money. Even without them, Tesla will turn a profit. For Tesla bulls and those with an eye for the next stock market gem, it's not enough to watch the company's remarkable progress from the sidelines. Your one-stop resource for the most recent information on Tesla, Elon Musk, Tesla innovation, and stock price targets is Seeking Alpha. Our channel may receive a commission if a customer makes a purchase after clicking on the affiliate links in the description. Indeed, it is somewhat natural, but I believe that under COVID, it was greatly accelerated, particularly for younger individuals who would not be able to achieve the accreditation requirements. They discovered private enterprises to which they had little or no access while researching new businesses, investing, and attempting to understand the nature of these emerging technology. And I believe that's why they came to us and asked, how come we don't make enough money? I think we make $250,000 a year, or we don't have $1 million in net worth to get accredited and have access to these amazing technologies early in our lives. I also know that's why we started our venture fund. Can you assist us in resolving that issue? Yes, it is the reason we established our venture fund. For as low as $500, users can gain access to SpaceX, OpenAI, Anthropic, xAI, and other companies. I believed that to have occurred. We have a lot in common. Rebecca and Charlie Roberts, who heads our venture capital initiative, met at a conference and decided that, although we are approaching this from different perspectives, we should both support the idea of democratization as it is still in its infancy. Our funds have performed significantly better than the market, the Mag 7, and other benchmarks since the election. In my opinion, the market is starting to indicate that this administration will back creative approaches and everything that would boost our economy's productivity and growth. We believe that deregulation will play a significant role in that. Tax breaks and tax rate reductions. You brought up the reduction in government expenditure initiatives. We think that government expenditure in the long run is a kind of taxation. It must be financed by more taxes now, higher taxes later, or essentially by inflation, which would erase the debt. We therefore believe that this push to improve government efficiency will be very beneficial, as it will limit the types of tax increases that have occurred in recent years and possibly even continue to reduce taxes, giving the private sector more money at the expense of government inefficiencies. My response may differ from President-elect Trump's, but in terms of boosting growth, I believe that if tax rates are going to be lowered, the most crucial thing this administration can do is make sure that the cuts take effect retroactively on January 1st, 2025. This is because, as the Reagan administration taught us, if tax cuts are postponed or phased in, businesses and individuals will wait for lower tax rates, which can impede economic activity. Apart from that, deregulation is crucial. I believe that the FTC's prohibition of M&Ed is one of the reasons why venture capital and innovation initiatives, particularly in the health sciences, have struggled so greatly in recent years. As a result, we believe that private enterprises will experience liquidity events into the public sphere, which will also become crucial. Well, it depends. Any business that wishes to grow rapidly, and particularly if it has a higher fixed cost base. The robotics sector is one example of this, would most likely grow faster in the public market if, once more, deregulation is increased and the red tape associated with going public begins to fade. Therefore, we believe it would be great to have both markets functioning effectively, one supported by more M&A activity when the FTC's leadership changes, and the other one simply taking advantage of the reduced red tape brought about by less regulation. Therefore, we believe that this administration will be very pro-business and will play a significant role in the economy's acceleration in the coming years. He has committed himself to this, I believe, in part because his own businesses have had to deal with regulatory pressures and challenges, and he just understands that if he could remove some of those challenges, he could transform the world much more quickly than he has already done. No, if you listen to Elon Musk, safety should be the top priority. Tesla makes the safest cars in the world, but regulators have focused on nearly every accident and fatality in a Tesla vehicle over the past 4 years, rather than the 40,000 accidents that occur in other cars. Therefore, I believe that he recognizes that there is a role for regulation, that consumer safety is crucial, and that we won't overlook it, but that there is such a thing as too much regulation. According to numbers I've seen, regulations from various departments have wiped 6 percentage points off of actual GDP over the past 4 years. Yes, that needs to be changed. However, are you aware of anyone else who is as optimistic about Tesla? That would be Seeking Alpha, today's sponsor. The greatest online source of pro-Tesla news is Seeking Alpha. To learn about the most recent Tesla offering, pricing goals, innovation, and everything Elon Musk has to offer, click the affiliate link in the paragraph below. There is a link to a very exceptional offer in the description. I'll tell you, even though we have done the study, Tesla is providing us with a great deal of comfort. Few analysts, in my opinion, have conducted the kind of autonomous mobility research that we have. We have conducted the research because we have a longer investment time horizon. I believe that more and more analysts will need to begin modeling what this implies as we approach robotaxis, and as they do so, they will come to the conclusion that this is an 80% gross software as a service business. What are your thoughts on these predictions, then? Do you already own Tesla stock and are unsure of what to do with it, or are you thinking about purchasing some? In election years, how do you feel about the stock market? Leave your questions and comments in the space provided below. Please share your thoughts with me. For additional updates and insights, remember to hit the like button and subscribe to Tesla Stock News if you found this video useful. As always, thank you for watching, and keep an eye on those stocks.